All right, all right, all right. Here we go. First jobs report in a long time. We got the August jobs report at the beginning of September, and then we didn't get anything since the shutdown. Now, we are 2 months since, it's actually about 2.5 months since the last time we got a jobs report, since we got that jobs report right at the beginning, first Friday of September, which means we're about 2.5 months since the first time we've gotten a Bureau of Labor Statistics jobs report. We are not getting the October data, unfortunately. That's been canceled, even though technically Donald Trump could have sent the Bureau of Labor Statistics to go work and go collect the payrolls data, or the households data, since the payrolls data is still coming in. He didn't choose to do that. Instead, he just chose to get good inflation numbers and sent them to work on the inflation numbers, which we did end up getting. So we know it was possible to get the October jobs report, but we are not getting the October jobs report. We are now just getting the September jobs report. Getting it in about 3 minutes. People are pretty bullish about it. So we'll see what happens here. We'll see what the components of it are. And we'll see if there's any hint of potential rigging, if you will. We've got the dollar ticking up a little bit. The dollar usually ticks up as we see yields move higher. So, we'll see if there's any kind of anticipation that yields might go up over here. And again, just to be clear, yeah, yields are moving up a little bit. 10 years up about 1.7 basis points probably in anticipation of this. But remember, this is first jobs report in 2.5 months. We have, let's see here. The 3-month average, right? We should write that down. 3-month average job gains between June, July, August were only 29K per month. This should beat. This is expected to beat at 51K. So we'll see what we get. Kind of excited to see it. I do, there's a balance here. If it's too strong, we totally kill the odds of a rate cut in December, and that gets bearish. I think over 60, 70,000 is too strong. If it's too weak, like it's heavily negative, which doesn't seem likely based on where all the estimates sit, then people will be worried about a recession, right? I don't think today's that day, especially since most of the big negative numbers were supposed to be in October. And that's the big negative set of data that we're just not going to get our hands on. So here are the Qs in pre-market, pretty stable, sitting at about 609.9. Bitcoin just under 92, and Nvidia rejecting this 196.53 line here. It's been pretty consolidated around this line here, so not a surprise. It's pretty stable basically. So here we go. We got about 50 seconds to go until we get the data, and we'll get to go break it down. We'll see exactly what we got. And so let's see here. All right. Well, buckle up, eh? So let's see. All right, September BLS jobs report. Remember, October skipped. Remember, October is canceled. All right. Here we go. Cool. All right, here we go. 5 seconds to go. Good luck, everyone, today. November 20th. Jobs report expected 51,000, and we got 119,000. 119,000. There it is. As expected, it's positive to the upside. That massively increases the moving average. It also revises, there's a negative revision. The prior is revised down from 22K. This is going to pop yields.
Non-farm payrolls are up a robust 119,000. 119,000 would be the best since April when we were up 158,000. In the rearview mirror, well, last month was downgraded from 22,000 to minus 4,000. Now, if we look at what's going on with the unemployment rate, it ticked up from 4.3 to 4.4. That was unexpected. 4.4 would, last time we were at that level, boy, I have to go back a ways. October of 2021 when it was 4.5%. Now, if we look at labor force participation rate, it ticked up. That's a good thing. 62.4 equals where we were in May. You have to go to April of this year when it was 62.6 to find a higher number. In terms of the earnings, average hourly earnings, month over month, up 0.2. That's a bit on the weak side. We're expecting up 0.3. Up 0.2 equals where we were in June. To find a lower number, you are going in the Wayback Machine to August of 23 when it was up 0.1.
Initial jobless claims just came in at 220,000 versus 227 as well. That's better than expected. Continuing claims about 24,000 higher than expected at 1974 versus the 1950. So, okay, wow. We're going to go through this report in just a moment. Market, I mean, this is pretty warm, but the market is actually treating it really well. This probably kills the September cut almost instantaneously. I think the September cut's probably dead on arrival at this point. That is a really strong report. So I'll make a little note of that, and then we're going to go through this BLS report here. But my guess, so my take, I guess, my take, Dees jobs report or Dees FOMC cut dead on arrival. That's my take after this report, almost certainly. So let's take a look at this. 119,000 in September, but has shown little change since April. Unemployment rate at 4.4 changed little since September. Employment continued in healthcare, food services, drinking, social assistances. Job losses occurred in transportation. What did I write? December FOMC cut. Yeah. What did I say? Sorry, yeah, the December cut, dead on arrival, right. Did I say September? My bad. All right, job losses occurred in transportation and warehousing and in the federal government. Okay, Verizon just started their layoffs today, by the way. Let's see, this is the household and payroll survey. Let's get rid of all this. Prior to the government shutdown, September estimates included data on a normal schedule. So this is their normal schedule. As a result, the establishment survey has a high collection rate, which is higher than usual. This is actually good. So they have more data than usual. However, they will not release the October jobs report because they didn't get sent to work. All right. Let's see here. Let's see. Both the unemployment rate at 4.4 and the number of unemployed people, a little changed. We've got unemployment rate for women, Asians increased in September. Jobless rate for adult men, teenagers, whites, blacks, Hispanics showed a little change. Number of long-term unemployed, little changed at 1.8 million. That's good. You don't really want to see that move up. You've got labor force participation rate this is a tick up. We were at 62.3, so that's why the unemployment rate went up. So let's write that down. When the participation rate goes up, participation rate up 0.1% up to 62.4, what that means is the unemployment rate can actually move up because more people in total are actually working, or at least looking for work. They're in the labor force. The number of people employed part-time for economic reasons, 4.6, little changed. Okay, among those not in the labor force, marginally attached to the labor force, individuals one, blah, 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 number of discouraged workers. Nothing has really changed much over here. Let's go look at the household survey and where these jobs came from. So 43,000 came from healthcare. We have drinking places, restaurants. That's interesting for September, 37,000, because that's specifically where you've seen weakness in earnings in more recent data. Specifically weak in earnings. Okay, in September, social assistance continued to trend up 14,000. Transportation, warehousing, 25,000. Warehousing and storage down 11. Couriers, messengers down 7,000. Federal government down 3,000. Little change in other industries. Average hourly earnings rose by 2 cents over the past 12 months. And let's see here. Average work week was unchanged. In manufacturing, it was also little changed. And then we had a the change in non-farm payroll for July was revised down by 7,000 from 79,000 to 72,000. And then August was revised down from positive 22 to negative 4. So that means we have 72, negative 4. This will be the new 3-month average, right? So we'll go new 3-month average is 72. Then we have, and that's going to be, was that 72 or 71? That was, yeah, 72, negative 4, and then 119. 72, negative 4 for Aug. That was July. And then for September, we now have 119,000. So if I add that together, I got 72, negative 4, and 119 divided by 3. That moves us up to 62,000. That's pretty good. 62K average 3-month, especially since the break even is thought to be probably around 0, right? 0 to 20K. Okay, let's look at the household survey to see if there's anything sus here. So, let's see here. Let's get rid of some of my old highlighting. All right. So we have a civilian labor force that increased by 470,000 per the household survey, and an employed survey of 251,000. So that's an increase over here as well. So household survey is up 251, worth noting. So we'll make a note of that. Household survey up 251K. And then this is somewhat similar to what we thought in the Alpha report. We thought worst this week would be the ADP report. Best would be NVIDIA in the September jobs report. So far, that's exactly what happened. And I don't think we're seeing much change here. Average hourly earnings month over month. Month over month came in at 0.2% versus 0.3% expected. But you did have a revision up on the prior, so that might explain that. Let's see here. Philadelphia Fed came in negative versus the positive expectation, though less negative than last time. We've got change in private payrolls we saw was 97,000. And we have the continuing claims and initial jobless claims that came in pretty stable, right? Those initial claims at 220K and 1974K continuing. So, now the big question obviously is it possible some of this data is Trump rigged, especially as we're hiding the data for October? It's possible. At this point, I don't know that it'll matter because the market should be enthusiastic about reducing recession risk, but I do think we're also reducing the odds of a rate cut. Though, interestingly, look at this. Treasury yields actually ticked down after that report. It's possible because jobs were less inflationary maybe than expected. However, it is leading Bitcoin up slightly. Ethereum's not holding on to the little pop that it had. The Qs are coming up a smidge, so positivity here. We've got Microsoft up 1.5, Meta's up 2%, Dell's up 3.4, Supermicro's up 6%, Tesla's up 2%, Oracle's almost up 3%, Blue Owl's moving up, Circle's moving up. Pre-market here is pretty set up for positive movements. Now we'll see what happens at the open here, but this is, I think it's hard to argue that it's not bullish. This literally beat every single economist forecast. Okay, let me write down some other notes here. Beat every single economist forecast. Donald Trump is going to cheer this, by the way. Trump is absolutely going to love this. No wonder he wanted the September report out. Let's see here. Okay. Civil service cuts, 3,000 there. Healthcare added 43. We saw that. Juxtaposed to the rise of unemployment rate. Doesn't matter. Only if you have a big spike in the participation rate is the move in the unemployment rate really going to be concerning. Going from 4.3 to 4.4, nobody cares. Household survey. They got that. Oh, they typoed. Lol. Let me just fact check that. I'm not crazy, but they said that the household survey showed employment rose by 119 versus labor force jumping by 470. I believe that to be incorrect. And if I look at the household survey, we have the labor force increasing by 470, but the household survey up by 251. So they made a little oopsie doopsie on that one. That's fine. Sometimes the suits make mistakes too. Actually, they make a lot of mistakes. I'm just fact checking myself now. Make sure I didn't misread that. The establishment survey was 119. Okay, let's see here. Average work week, no sign of easing there. No sign of easing on the unemployment rate. Yeah, okay. I mean, that's... Let me see if Nick T is awake and saying anything. But I think this is broadly... This is good. You know, this is broadly bullish. This beat... let's see here. Okay. Jobs report today. Jobs report today beat every single economist expectation at 119,000 gains, raising the 3-month average to 62K. Okay, let's go Nick T. Nick T says 8 minutes ago, job growth was revised to negative 4K in August. Employers added 150 or 119,000 jobs in September. Unemployment rose. That's it. Okay, so he's just observing the data. Nothing really exciting that he said there. Okay. Okay, interesting. So, looking at the rest of the docs just to see if there's anything else. First of all, any particular commentary that they gave us. Here, no, this is still the same news release data. They gave that to us yesterday. Nothing's changed there in terms of dates that they're going to give us, content or whatever. If we... I mean, we could look at part-time briefly here, but employment class by work, part-time status, all industries, part-time for economic reasons actually fell in September. Look at that. Part-time for economic reasons fell. However, for slack or business conditions, it actually increased, and could only find part-time work decreased. Part-time work for economic reasons for non-agricultural industries also declined. So both sets of part-time work decreased. I'll just make a little note of that. Slight decrease in part-time workers as well. And the rationale for that was because of slack, mostly due to slack/business conditions. All right. So this gives us a nice little summary. This, by the way, is in the Meet Kevin app. If you don't have the Meet Kevin app yet, make sure you check out the Meet Kevin app. Let's go see what the odds of a rate cut are now. The Meet Kevin app is free for you. And just download Meet Kevin in your Apple or Android app store. And then under the data tab, you'll actually get to see this. You could also change your preferences and your notifications to decide what you would like notifications on, or change the theme of your app or whatever, which is kind of cool, especially since YouTube won't send you all the notifications. And thank you to all those of you who joined the Meet Kevin membership last night. The odds right now of a Fed rate cut, surprisingly, still stable, which is quite interesting. I think maybe because markets were expecting a beat here, but stable pricing for Dees rate cut at 31.3%, which is probably the most bullish result here, that you're not seeing a collapse of these numbers, right? So, you know, that does sort of jive with like a short-term pump, if you will. We'll see if that holds. Fed Hammock now saying that easing monetary policy may now lead to excessive risk-taking. Oh, great. Now the Fed's going to start yapping. So you've got Fed Hammock, who's now coming out saying, oh, well, if we cut now, we risk persistently higher inflation, and financial risk taking. Basically, a bubble. Oh, great. The odds of a December rate cut actually just moved up again to 34.9%. Really interesting. I don't know if the bond market's reacting to just the nominal unemployment rate. The 10-year is now unchanged, but the 10-2 Treasury yield is up to about 56 here. Hammock says, elevated leverage in hedge funds, life insurers, easing monetary policy now may encourage financial risk-taking. Risk management rate cut could increase financial stability risks and prolong higher inflation. Conditions are quite accommodative right now. Right. Okay. Conditions accommodative, high leverage in hedge funds and life insurers. Private credit merits watching, she says. Okay. Watch private credit, yes. Banks are well capitalized. Oh, I've heard that before. Watch private credit. Guys, everything is fine. There's no reason to panic. And Nick T says private sector job growth has averaged up to 57,000 now. That is not including the government. So 57K for private on 3-month average. Update that in too. Okay, good. So now we're going to have to see what happens at the open. Will people use this as an opportunity to exit or not? But this is, as far as we can believe the data, this is pretty good.
Bullish catalyst.
Somebody says, why did they delay this release if it's good? Well, yeah, I mean, they could have released this, a month and a half ago. I guess nobody was there to process it. But in fairness, they actually collect more data even while they're while the government shut down, because the survey responses come back, right? So this is data from September, which means it's 2 months old. Yeah, 2 months old. So somebody says this seems rigged. Yeah, I get that. I totally understand that, because it's like, let's give them the September report, but not the October report. And then the September report blows everyone out of the water with a really good report. And you get a revision down in the prior month. It's like, let's revise down August a little bit. Let's make September look really good. And then whatever we need to hide, we'll hide it in October, because we won't actually release the October report. It's interesting. Like, I get the skepticism. By the way, the odds of a rate cut in December are actually rising. It just went to 37.3%. So I'm not entirely sure what's going on right now in the bond market, but it's weird. So anyway, that's the data for us this morning. I'm going to go grab a cup of coffee, and then I'm going to head on over to the course member live stream, and we're going to put together our alpha report for trading today. So again, thank you for those of you who went to meetkevin.com and joined. I think all the coupons are gone. They should have expired last night. Let me see here. I think it's possible there's like one left, but because it switches when it gets close to expiration to these, like, it's got like 2 coupons left or 3 coupons left or whatever. NVIDIA, is it done? Let me see. Oh, no, I think it's done. Yeah, no. Okay, good. All right, it expired. Oh, wow. That means they all sold out. Okay, no, it's done. All right, coupon's done. All right, folks, thanks for being here. We will see you in the next one. And if you have any questions about what we do, you can always email us.
Email staff at